Hello, trading is closed on March 30th, 2020. Let's go over our calls. Look for the pattern with the early low, typically a rally day with a high and a fine lower. We got that. Tomorrow also has the early low. We said that, repeat if you were, let me just show you what we said. So the pattern had the early low, typically it's a rally day. Bulls needed a strong open, gapping up smartly, ideally clearing recovery highs. If they could do that, we thought they could probably follow through to our higher target. Well, it was a rally day, but there's 2 days of rally, and we couldn't clear the prior high. And that has the potential, at least, for real trouble. Come back to that in a minute. During the day, we had an ultimate signal here to buy that worked. MEJT said this drop was false to retrace, and it did. Why could there be trouble? Well, here was this break of the trend line. The break got rejected. And so normally you would anticipate follow-through. There might be a few stumbles along the way. One of them is the 20-day moving average, and that was today's high. So we have resistance at the high. That's in addition to 2 days of rallying not being able to close the high. Now there are any number of ways to count this, and I think it's particularly risky to risk money on an Elliott wave count when there's more than one way to count it. But this is a valid count. There's a good Fib relationship between waves 1 and 3. Even though there doesn't have to be, there's a good Fib relationship between waves 4 and 2. And if that's right, wave 5 should start someplace, and if it starts here, that's a big if, and if it's equal to wave 1, as it often is, it takes us to just under 2100 cash. So if we stop here at resistance, at least the potential for a sizable drop. Not only is the wave count showing good Fibonacci relationships on this time frame, if you go to the 15-minute chart, you have your ABC with good fibs for wave 4. This big drop is compatible with wave black 1 of magenta 5. And here you have an ABC with A and C being equal right at the high, wave 2 retracing most of wave 1. If that's the end, we don't know that until we start dropping, but if that's the end, you would anticipate us to go into an impulsive wave, black 3 of magenta 5, practically right from the open tomorrow. And of course, if we go up higher, the whole relationship falls apart. Let's assume that we do drop at the open. If so, I think it's possible to calculate some targets. Let's say that we have wave 1, magenta 1 equal to, the colors are different here, but it's 1, 2, 3, 4, 5. It would bottom at 2099.73. I had 2 possible targets for the end of this drop, one of which is 2097.20, which is essentially the same number. So if we do start dropping, you've got great Fibonacci targets just under 2100 cash. Now that would be a 5-wave structure, so it couldn't complete the correction of the huge advance. That would be the end of wave A. but there's no law that says wave C has to undercut wave A, and you could just have a big consolidation in here, and that actually could hold. That's one possibility. But if, and that's an if, it does not hold, then things are pretty ominous. The next target I have is 1296.32. If this is A, and we then rally in B, and then we drop to this target, very often A will equal C. And if that happens, we have B, assuming A ends here, B would end around 25.88. Then they'd be equal. And the real killing thing is that price is a 38.2% retracement of this number. So we have a potential, but not an obligation, to drop to just under 2100 for wave A, rally back up to just under 2600 for wave B, and then drop to just under 1300 for wave C. Now it's all speculative at this point, and of course none of this has to happen at all. But if we start dropping, and that hasn't happened yet, if we start dropping impulsively from here, you could make a pretty good argument for us to drop to just under 2100, pretty much in an impulsive style. So if you're a bull, it's very important that we clear this high and kill the pattern, because if we start dropping from here in spades, if that happens, I think it's a very plausible count. So, Tuesday's pattern has the early low, doesn't mean you won't gap up. 2 days of rallying have not succeeded in topping Thursday's high. It should be there is Fibonacci wave balance for the bear market bounce to have ended and a new strong down leg to have begun. You haven't had confirmation yet. Confirmation will be starting a strong decline right from the open on Tuesday. And if that happens, underline the word if, look out below. And if we rally past last week's high, it kills the pattern, we still have higher targets on tap. So I'm going to anxiously wait to see what happens early tomorrow, and if we start dropping in spades, I'm going to believe it, and that's today's call.